Good evening, everybody. Let's get this party started. How's it going, everybody? So, prime time video, says Matt. Hey, Matt. Thanks. And I didn't do a good job of advertising this, that I was going live here. So, we've settled on going live. The Sundays are really, really hard for me. It's just, I never have time. I've literally been running all day long, nonstop. You would think weekends are busy. But I'm going to be doing probably the last Sunday of every month, doing a market open kind of month close recap. And then we'll be doing a live during the week, weekly. Like, I got to pick probably Thursday morning. My schedule is just literally crazy. All right, but welcome everybody. Today we're going to talk about something I'm seeing, a kind of a theme across crypto Twitter, across our community. People who are, saying, "Oh, I'm just gonna wait. I'm wait for lower prices. I'm going to wait for lower." And what I want to talk about today is being careful not to miss the boat when there's opportunity staring you in the face. There are some things you should do, and there's some things you shouldn't do. So there's two sides to this. One, we shouldn't just rush in and catch falling knives and take aggressive positions as things are coming down. But at the same time, if you have a long-term view, there are some things that could unfold that could leave you behind, and there's a high probability of a scenario setting up that a lot of people who were in crypto, that bought into crypto in 2020 and 2021, that have now capitulated at a loss in a lot of places, they might be thinking that price is going to continue to crash for a few months and be looking for drastically lower prices and find themselves on the wrong side. And we're going to talk about why that is and how that could occur. We're also going to talk about why you shouldn't be overly aggressive, though, at the same time. A little bit of balance. But I think this episode is going to be all about the balance of let's not miss opportunities that are presented to us, but also don't be foolish about the decisions that we're making. But welcome, everybody. So let's take a quick look. Market open here tonight. So I'm going to tell you guys, I just came in from my Bitcoin mining shed. I've been furiously trying to rebuild a bunch of shelves and my heating, venting situation, because obviously in the bear market here, I'm looking to ramp up and buy more Bitcoin miners. I just got a batch of hash cards that I thought most of them were going to be bad and non-repairable. Majority of them were repairable, so I'm going to have a lot more live machines here in the next coming weeks. So I've got to make space and add capacity to my mining rigs because, again, all my hash boards that I thought were going to be, most of them were going to be dead. Many of them are repairable, and so I'm getting a bunch more hash boards on a bunch of live rigs here very, very soon. So that said, let's take a look at the broad markets here. The VIX. So I always say this: whenever the VIX spikes, I try to sell. That's a good time to sell some premium to the market via options. So I can have an auto bot that goes in here, and every time it spikes above 30. So I've gotten a couple of good sells off selling this higher volatility into the markets with a premium spike. Usually it straddles, kind of neutral straddles, but I take advantage of volatility to sell higher. But the VIX is coming back down. This is what happens with the VIX. I've watched it for a long time. You'll see it spike above this like magic 30 line I've got on here. I'll go back to the weekly. And then it comes back down. But you have to kind of close positions. Open above it and close below it. What I've noticed when the VIX spikes above 30, it either keeps going or it comes back down, cools off, and then makes another breakout attempt, right? So you can see here, let's highlight this. It either breaks out and it runs quite a bit, and then it comes back below it and stays below it, or it comes back down, cools off, and blasts through again. So if we have a really major black swan, this was a pretty bad one. Obviously, 2008, the VIX went ballistic, and then over here in 2020 went pretty strong, but in a very short time. But when you see it spike above like this in the fall, it's probably going to keep falling until it finds a bottom. And the next time it blasts through, it can just run. But the VIX is a good indicator, obviously. It's a volatility index. It's a good indicator of when you see the VIX spiking, it's probably on the downside, right? It's usually stairs up, elevator down. So let's take a look at the 10-year. And I'm just looking at these charts live with you guys. This is like my live reaction to the markets open, because I had a good day today. My family is starting to feel better. My son, we all got to go swimming. So I got to take my son 2 swimming lessons 2 days in a row, yesterday and today in our pool. So we spent several hours in the pool teaching him all kinds of stuff, and he is a little just water bug. He's loving it. The 10-year broke this little bit of a high right here. Get rid of this. Yeah, so the 10-year yield is on a little bit of a reversion here. Looks like it's trying to put in a bottom. Did break this recent local high. See if it puts in a higher low in the very macro sense. What I really care about right now, let's take a look at the DXY. I've been watching this breakout level. You see this kind of pattern unfolding. You gotta get this little ascending pattern here, and we're holding this 103, 104 level. So what I'm kind of looking for here is does it consolidate here and then make a resumption off of this 103 breakout level? Let me show you what that level is. That's the swing high from 2017. So this is the dollar index strength. That green line is the hey Edward Park. It's been a while since. Yeah, I've been neglecting my YouTube a little bit. Sorry about that, but I'm going to start picking it back up as we get into the bottom of this bear market here. This is a really good time. I've got a lot of stuff to talk about. I've got something really cool. I'm going to give you guys a quick preview of a ranking I'm working on, kind of a community effort. I'll invite you all to that later, but a little preview of that. General disclaimer here. I keep forgetting my disclaimer, but I'm not a licensed financial advisor, so anything you hear me talk about today, just my opinion, what I see going on in the markets. Dark video. Oh yeah, I'm doing this late night crypto and rum. Technically, I forgot my coaster, so my drink cup is sweating all over my desk. I've got to find a receipt or something to put under it. What is this? Eagle Postal. So I've got rum and coke tonight because it's hot, hot, hot. It's been 100 degrees for like 8 days in a row here. So I'm gonna drink something cold. It's more substance than just a rum. But it's a late night crypto and rum, kind of dark in my office. But yeah, thanks. Welcome. All right, dollar index. We're going to see if it's going to hold 103.8 and resume up. Obviously, this is going to be really dependent on CPI print and what the Fed decides to do next month. I've heard a lot of macro people say they think next month might be the last hike for a while and they cool. So we'll see. The CPI probably needs to be either really close, just barely above 8%, or preferably below 8%. And then I think they'll do a minor rate hike and then calm down for a little bit. That's my guess. I've been listening to a lot of Lynn Alden, and I have to agree. There's so much debt in the system that I don't see that they can really continue to ratchet too hard. They're going to have to live with some inflation because there's just too much debt that's going to be too difficult for too many people to overcome if they keep hiking rates. Oil is a big driver of all this. Oil looks like it's starting to lose some steam. Just look at my moving averages here. We're below the 50 now, holding the 111, 100. We'll see if it flatlines and consolidates. A good indicator that it's going to maybe even resume up is if it consolidates right around the 200 or above the 200, which is $90. So if you look at the chart, let's go to the weekly on oil. 76 would be, we're cooling off pretty heavily. But yeah, this little bit of a swing right here. This whole region, what did it top out at? We're right into support created by all this price action over here right now. I would say the 200 is going to get us back. So this whole region of trading, that's going to be a lot of supply. That if it's going to be a really bad situation and oil is going to actually resume up, there's been a lot of underinvestment for years. So unlike this spike to 140, we might see a little bit different. We might see, instead of us big spike, a lot of supply comes online, and there's a big crash, which obviously this was also. I attribute our 2008 debt crisis and debt bubble bopping and the housing crisis to oil prices a lot, obviously, but when that crash happened was coincided with the markets crashing. So we'll kind of see here, but I would say that we need to hold this 200-day moving average, which should inch its way up to this 90-95 range. But that whole support, this whole area that spiked above and kept getting rejected, eventually ultimately got rejected. This is now, we've broken all these highs, so this is now our support. This high was not likely to hold. We actually spiked above it and came back down. But if we hold the 200-day and right around, what would that be, 90, the mid-90s really, in price, then we might be set up for resumption. I don't think so. I would imagine oil will do something that you've seen, patterns that we've seen before. It just depends on a lot of factors, but we could get a resumption off of this a little bit higher. But my guess would be that we come back down to this area, right on 70, and then that consolidates. So that's the fair value of oil for years and years and years. I used to trade energy. Has been about $70 to $80. It's been the fair value for a very long time. So we'll see if it actually, instead of seesawing wildly around what fair value is in the market, which I said, really, I'm going to draw fair value. It's been this for, I don't know, since 2099 probably, maybe 2000. And it depends on this. There's been a bunch of factors, right? But fair value for oil has been right there for forever. Depends on how you measure it. Depends on a few macro situations, but pretty much in that range has been our fair value of oil. It was undervalued over here in 2000. Of course, that's going to move too with just inflation alone. But anyway, let's see what happens with oil. Oil is obviously a big driver of inflation. Now back to NASDAQ. So here's my kind of, what I'm looking at on NASDAQ is this kind of symmetrical pattern of, we had an ascending pattern, we'll call it a wedge maybe, but really this kind of ascending channel. But it did tighten at the top, right? So there was a little bit of tightening in price action at the top, and then it rolled over. And when we got that rollover under those moving averages, this was the time to short the market right here. When you rolled that 100. You had the 50 curling over pretty hard, under it pretty well, rolled that 100, time to short the market. Now is not the time to short the market. We're too far detached to the downside of the moving averages. You're going to get that dead cat bounce. Everybody's talking about it. Everybody's talking about the bear market rally in both equities and crypto, and then probably another leg down. We'll see how things unfold. But these are the two interesting support regions. So NASDAQ 11K and NASDAQ 9600 were my two target areas. We could get rejected here and then continue all the way down to the that prior pre-COVID swing high 9,800, 9,700. But this pattern is going to be telling, and when we break to the upside of this pattern, again, the false breakouts are pretty prevalent. It very well could just nuke after it breaks out of there. Let me show you 2002. We had a very similar setup. Let me go back here. Hold on. I don't know if y'all were watching the markets. I wasn't. I was much younger then, but I was watching this with interest. Yeah. So if I go back to our NASDAQ, you can draw a similar pattern on NASDAQ way back in 2000. You had this kind of descending pattern, and then it seemingly broke to the upside, and it broke down. You seem to get a bit of a bottom here in the early 2000 bounce, and the sell-off really gained steam. And then you had a second kind of descending, tightening pattern that was closer to the bottom, started to break out, took out the lows, and then you were off more sideways than down for a while. But just because you put in these ascending patterns doesn't mean that you're out of the water. Now this was really, I know a lot of people thought this was a channel, but it was tightening in my book at the bottom here. It's just the way I see it. I just see this as a slightly tightening on the way down, but still a very ugly chart. So the moving averages are what keep us safe. You roll. This was if, in 2000, if you were just using my moving average strategy, you'd have been out of the market right through there, right? So Market would have peaked at 4,800. Hopefully, you would have had the, we'd have had the intelligence to take some profits on a monster disconnect, and then you take the rest of your profits on the way down here before the big collapse happens. Back over here, looking at the market now, and you're going to get a second chance at that 200. Most likely, it rolls when we hit the 200 here. Obviously, if we get a breakout of all this, you hit these moving averages as they come in, and you roll. That's a good place to look to duck and cover. But the problem is this environment's a lot different in that, again, there's so much debt in the system. Who knows how high rates can really go, right? All right, let's go to the crypto. So I'm just kind of live reacting to the markets open here. So we had a strong rally late last week on S&P and NASDAQ. I mean, yeah, they have so much work to do. Like, we don't know. This is just trying to catch a falling knife. You get out of these kind of, if you're a shorter term trader, you get the 200-day moving averages way up here. Price got down to 17% below the odds are you're going to bounce back up to the 200 at some point. 200 might be back down to 4,200 by the time you get there, and then might roll over again. All right, Bitcoin. All right, so we have a really strong support area that we're running into right now, right? So that's the prior all-time high, 20K, right around 20K, right? So we spiked below that on the huge liquidation. 3AC, we talk about some of the news, I guess. 3AC, Celsius being in hot water, but 3AC getting liquidated, selling all their GBTC. A few major liquidations, and we had a big spike down to 17.6. That very well could be the bottom. But just like NASDAQ and everything else, when you break these, when we finish kind of putting in these patterns here, you can see it's kind of a slowly descending, slowly slowing down on the downside. Not a whole lot, but it's getting there. That's almost asymmetrical, but it's slightly slowing down on the downside. You're going to get a dead cat bounce, and then probably your bear market rally, and then probably roll over and retest these lows or something close to it. If we don't hit, this resistance, 24, 23, 28K and roll down to 13K even. It totally depends on CPI. Totally depends on how aggressive the Fed is. Nobody knows that right now. But the thing about what's going to come next, what's going to inevitably happen in the next, say, 5 years. There's a couple things that are inevitably going to happen in the next 5 years. This is the meat of this session now. Well, the meat of what we're talking about today is it's inevitable that the Fed cannot raise rates as high as in other times in market history. If you listen to Lynn Alden, she makes comparisons to that. This is a lot like wartime, post-war time. The money printers were lit up to fight, in the war effort. And this is kind of like the post-war. You had high inflation. And so there's only so much you can do when there's a lot of debt in the system. You can't really raise rates too terribly high. Debt markets start to break down, right? So inevitably, they're going to have to slow down at some point and let hey, this is Brandon, not Jordan. But moving averages I use are up here if you can see them, the 50, the 111, and the 200. 50, 111, 200 are the main ones that I use. All right, so the 200-week moving average is one that I use for Bitcoin, right? That's my bias, my long-term bias signal. Thanks for the question. So it's inevitable that they're going to have to, at least if nothing else, back off raising rates too much at some point, just because of the debt it built up in the system. No problem for the confusion there. And when they do, hard assets are going to run huge. And we know we have a couple of big catalysts coming up for Bitcoin specifically. And so this is the meat of this. Let's not be too cute in looking at all the potential downside and miss the opportunity in front of us. Bitcoin is trading at $21,000 right now. Even if it goes to $13,000 in the next 4 months, right? The odds are that it's going to be trading much, much higher than that in 5 years. And why do we know that? Why do we know that? Well, the odds, this is not a guarantee, right? This is a kind of a macro discussion, long-term investor discussion. It's really more what I do, more my strength, that long-term trend trading. And I do take swing trades when there's a real clear trend, but the longer-term trend trading and fundamentals investing. We know that we have the SEC is eventually going to approve a spot ETF in the United States for Bitcoin specifically. Now, there's a lot of regulation. I'll talk about regulation. What I get the strong sense of is regulators are going to go after these scam, Ponzi, whatever cryptocurrencies, as they should, because there are way too many of them. But everybody agrees. Everybody agrees Bitcoin is properly decentralized, and it's the one asset that's competing with traditional assets in a very real sense. It's competing with gold in a very real sense. It's competing with U.S. bonds in a very real sense. Those are huge markets. It's being adopted as a nominal currency, either officially by some countries or unofficially by the people of many countries that have very high inflation issues. It is being adopted as a currency. It is going after the gold market. It is going after that store of value. It is going after that safe yield bond market investment. No problem. So we do know that when that spot ETF is approved, that is going to open the floodgates for a lot of funds that really can't structurally go through the process of being able to buy spot Bitcoin and cold store it. It's just not something that they're set up to do. But they are set up to buy ETFs, registered ETFs in the United States. And these major funds, when they can actually allocate 1% of their portfolio allocation to Bitcoin, maybe they take, instead of 5% gold, they have 4% gold, 1% Bitcoin. That's a lot of money coming in. We have the 2024 halving. We all know the halving, that supply shock that it creates, with as much price has come off, that halving was not priced in. I speculated that the market would figure out the halving and price it in. That halving is not forward priced in right now. There's no way at $20,000 that halving is forward priced in, right? It might get there. This is another risk factor for people who are waiting for much lower prices much further down the road, is that we could get a spot ETF approval next month. I mean, it could be in a few days here. I haven't seen any news recently if there's anything changed, but Grayscale's on a full-on push to get their fund approved for as an ETF right now, and that's due the 8th of next month or the 6th of next month, right? So we could get a surprise approval, and the market is likely going to be more apt to try to forward price in the 2024 halving. It is not priced in at $21,000. The halving is not priced in. Clear as day. We have some pricing in to do. So if you look at this chart over here, we are either right here or we're right here, right? We're probably at the close to the bottom. If we make a little bit of a recovery, then another stab lower next month, which is kind of my expectation. I do expect us to do almost exactly what we did in the 2018 bear market. Your capitulation, a little bit of a rally, secondary capitulation, hit those numbers that a lot of people are looking for, and then a bounce. But what if we just did this? What if this was the low? Look how much below the 200-week moving average we are. What if that was the low, right? Is this a time to sell all of your Bitcoin and have cash? What do you think that the Fed is going to be successful in getting back to their target 2% inflation? Do you realistically think that's a possibility? Because if you do, I got news for you. It is not likely. It's going to take years. It's going to take years of extreme financial discipline by both the federal government and the Federal Reserve to actually get all this damage they've done back under control and get us back to a nominal 2% inflation. In my opinion, the cat's out of the bag. Way too many people are seeing this inflation. Way too many people have woken up to the reality about how the Fed works and what the problems are that we're dealing with. 1 second, guys. Sorry, I had to clear my throat there. So, you know, you look at just the reality is that they're not the federal government is not likely to be responsible, and neither is the Federal Reserve long term. They're doing what they have to do today to fight the clear and present threat of really high inflation. But they're not going to be able to get it back to 2%, right? And this is going to become a problem. And the narratives are going to then flip back, right? Gold is probably going to make some noise before long. I would have bet gold makes some noise. Let's take a look at the metals. What do we got here at Market Open? Been watching, so my preferred play is silver because silver is a deflationary asset. I don't know, people kind of don't think about this too much, but we talk about gold's inflationary, right? You know, there's some usage in gold industrially, but there's still more produced than there is used in industrial applications. Silver is the opposite. There's more used in industrial applications than there is production of silver. Now, there's a lot more silver, so it's a lot less rare of an asset, but I think silver is a little bit more undervalued than gold is. They're both great. I would have an allocation. I have bullion on both. I have a physical allocation. Take this off a log chart. No wonder things look terrible. So I think they're both good, but gold started to break down. You see this uptrend that we were watching here? Gold started to break down. What we get for a weekly close here? Weekly close below, back above. This is a 1814 level. I forget the significance of that, but I forget why. It's a monthly level. It's a pretty important level, and price has just been massively reacting to that level. It's a historic, maybe a monthly high over here. I can't remember, but I have it on my chart for a reason. 1814. It's an important level. The prior all-time high of 1919, or right around there. I think it might be slightly higher. Gold appears to me to be consolidating. You know, people maybe be calling out this cup and handle here. I'm not sure. Yeah, it looks like it's consolidating for a little more upside. Silver too. Both of them look like they're consolidating me for potentially more upside. In the very short term, they're below moving averages. There's no momentum to play yet, but the pattern, the longer term pattern, is definitely there. So, you know, I definitely think that we have some price appreciation in the next few years in hard assets. Real estate's going to cool off. Real estate's the one asset that really held up well. I had this discussion the other day. When you look at what the actual inflationary hedges were, the inflation hedges were, real estate was the ultimate inflation hedge. It was the one that's the one asset that performed extremely well in this high inflation environment. Bitcoin did well for a while, but you know that was more cyclical around its halving cycle and everything too. So Bitcoin and crypto did fairly well, but Bitcoin specifically with its hard cap did very well. You know, the metals did okay, but the stocks obviously did very well, but real estate was the one that really did well. And in this pullback environment, we're pulling back. This is like clear as day to me right here. See this? This is the Russell 2K. But you look at, what was I saying about, I forget, I saw the Russell chart. This is interesting. I'm going to have to do some work on this chart here when I get off this stream. The Russell's interesting to trade. Russell 2000. I'm seeing some real opportunity over here in the Russell. I just saw this, lit this up. That looks pretty promising to me. I like what that chart's looking like. I haven't looked at that one. Yeah, it looks good for a bounce. Bounce back up to what that's 21, 23, that swing level there. Yeah. Level we lost. A bounce back up to that might be a good play. All right, back to crypto. I want to one other thing. Oh, I was supposed to have Alan come on with me tonight, but he is not feeling well. So everybody wish Alan well, but yeah, he wasn't feeling well, so he didn't end up joining me tonight. So I started this. I've put just a little bit of work into it. I'm going to be putting more effort into this as time goes on. I'm working out a few things here. I've had a lot of this stuff in my head and then scattered around, but what I decided to do is put this in one place for my community, and I shared this This is a live Google Sheets document. If you want to join us in trying to build this out, small cap and then researching projects. And then here's our small cap research document. We're putting all these notes in here, doing some scoring, putting notes, working together on coming up with what the best small cap opportunities in the bear market are, and then ranking the top 100s. This is the top, really this is the top, this tab is the top 100 charts. And what I'm going through here and doing is putting today's market cap, and I'll put some formulas in here to pull some live feeds so that these stay up to date on the market cap numbers. Give it a risk rating. This is really 0 to 100 in the crypto space, specifically not like comparing. One is not government bonds. One is if Bitcoin didn't have any ESG concerns, a big one, right? Something like that, right? So Bitcoin has a risk rating of 5 because of all the ESG kind of nonsense around the green and the proof of work issues, right? But this is, I think, so the potential market cap is in the next euphoria cycle. Yeah, since Alan isn't on, everybody go long. It's time for it to break out. We have a breakout coming. Alan isn't here. I'm gonna leave that comment up. This is the potential market cap that I see as realistic, and how we calculated this market cap was, look, let's take the gain from we've obviously had a couple of clear cycles, right? 2017, 2020, 2021. And so we're looking at what were the gains from bear market low to peak, and we're taking a significant 50%, at least 50% off of the peak of this last cycle, right, for diminishing returns. So this is what the potential market cap of these projects could be based on like for like projects, how they did before, and thinking about the competitive, like how competitive that space is, how much this is if this project captured all of the potential market interest in that type of project in the next cycle. What do we see the market cap could be? So I could see like Bitcoin, for example, it made it to $1.5 trillion. I could see it easily getting to $5 trillion. Like, I don't want to predict it getting to 10 or anything else. I could see it hitting a $5 trillion market cap, a few X higher than this last peak of this last cycle, which would be a couple $100,000 Bitcoin. I could see Ethereum hitting a $1 trillion market cap, which it almost did anyway, this last cycle. But I think, Ethereum's could be one of the best bets this next cycle just because of its triple halving. So I've got some work to do around this. I think the market cap number on this is a little low. Might bump this up a little bit. But you can see the result is the opportunity score. So this tells us, this will help really define how much of our portfolio allocation we should put toward these projects, right? So we're looking at, based on a number of factors, and I'll probably have another tab here pretty soon that really puts a bunch of numbers and thought and process around how we come up with this potential market cap number and how we come up with this risk number. And this is just, I need to get live feeds from the market cap today, right? So what we're looking at is what's the delta of the market cap today to the potential market cap, and what's the risk of us getting from this number to this number, really is what it boils down to. What's the likelihood we get from here to here in the universe of crypto, with Bitcoin being the safest and something like XRP, in my opinion, total trash, being a really high risk. And a lot of things could go wrong and it not achieving this potential number. You see, as I go through here, I have most of the layer ones. I put them at $100 billion potential market cap because that's about what some of the really big projects hit. Are close to it. That's what we could hit this next cycle. Some of them almost got through this last cycle. So that's a pretty safe number to throw in here, $100 billion, right? So you look at, and we might up these numbers a little bit based on, if we get a euphoric peak, we might get a little bit higher than some of these numbers. But for right now, these are pretty conservative numbers. But you can see here, like Polkadot, pretty big opportunity to go from $8 billion market cap to $100 billion market cap. But you take that risk rating there, okay, it's maybe not as good of an opportunity as, say, an AVAX, which I have as a higher potential market cap. Why does AVAX have a higher potential market cap? Well, Polkadot has limited parachain slots. So not only is Polkadot and Avalanche like a layer one, pseudo layer one, they're interchain. So they have higher potential as an interchain project. as does just a pure layer 1. Why does ETH have a higher potential market cap than all the others? Because of just network effect. That's why, like, you'll see Atom, HBAR, Tron, a lot of these layer 1s that if they really hit and do really well next cycle, they could hit about $100 billion market cap kind of toward their peak. And what's the risk of them getting there, though, right? And we combine that delta between their current market cap, the potential market cap, do some math behind the risk rating, and give us an opportunity score. So you can see early on, we have a lot of work to do. Elrond, which I'm not surprised by, has the highest opportunity score. It's a $1.3 billion market cap. I could see it realistically hitting a $200 billion market cap because it has a lot going for it. It has higher potential than other layer 1 blockchains for a couple of reasons. But mostly because it's an integrated DEX too. So the same team that built Elrond built a DEX, which is kind of unique to Elrond. So it gets a little bit higher potential market cap. But you look at like Cardano. Why does Cardano have a $500 billion potential market cap? That's pretty aggressive. That's a really big number. And the reason is it has fantastic tokenomics. So when you look at the potential market cap, you got to look at tokenomics too. And that's what also gives Elrond a much higher score of potential market cap. You're not going to get a really high market cap if you have very bad tokenomics and you're going to have retail getting dumped on by insiders who have been holding for a while, right? It's not going to give you a big market cap potential. So it's going to cap the upside. But the reason Cardano has such a high market cap potential is because it's already closed deals with sovereign nations. And so has Elrond, for that matter. Elrond has closed deals with sovereign nations for major projects. ADA is probably the forefront of that. But it's tokenomics, it's hype, development. A lot of things go into giving it a much higher potential market cap number and a relatively lower risk number. So really good opportunity score on Cardano. Really good opportunity score on Elrond. Interesting, Litecoin came up with a really good opportunity score. I had to be honest about this, going, well, here's the thing about Litecoin. It's a pretty high risk. Maybe the risk is a little bit too low because it's completely it's not needed with Bitcoin. Bitcoin does everything. Litecoin is only a Bitcoin clone, realistically. With MWeb, it's got some privacy. Maybe it has some of that space. You can take something from XRP or Zcash or whatever on those privacy coins. But because it's seen as Bitcoin's little brother, it's a fixed supply, hard cap asset with extremely good tokenomics. Like Litecoin is probably the second best tokenomics you're ever going to find in crypto because Charlie sold all of his coins. And so it's literally zero founder coins out there. It is just a pure fair launch coin. So it has super high potential. Like it can spike big time. That's the thing about it. It's not a lot of insiders that are going to be dumping on you with Litecoin. That's why it can run so much. So it's got a really high market cap, and it's got a pretty low risk. Like realistically speaking, if Bitcoin runs, Litecoin is going to move too. People that want to buy Bitcoin but don't want to buy a $60,000 coin or whatever the price is at that particular time, look at Litecoin and go, it's a couple $100 and it's Litecoin's little brother. I'm going to buy that. It's cheaper. I can own a couple of Litecoin. I can't own a full Bitcoin right now. It's too expensive, but I can own some Litecoin. I can own a bunch of the coins. So it actually has a really good opportunity score. Loopring, interestingly enough, came out with an extremely good. I didn't realize the market cap had fallen that much. Engine, a few other projects. STX, FTM for the. So I've been talking a lot about that. I think one of the next big themes of this next cycle is going to be directed acyclic graph projects that have really figured things out. FTM, they're still overly centralized from my view, from what I like. That's the AZERO is going to have to be on here. I mean, it's one of my favorites. I guarantee you AZERO is going to have a monster opportunity score. Like I know it. I don't have to guess that one. It's going to be a huge. Let's see. We'll do AZERO together here in a second. It's going to be huge opportunity score. But FTM has a surprisingly high opportunity score. It is a graph-based project. I gave it a really high risk rating, but it's got a lot of potential, and it's a really low market cap. So you look at the delta between the market cap, opportunity, even with some high risk, pretty good opportunity scores. This is what going through this process I think is going to help us out a lot of like, all right. And then, like I said, we need to put some more thought into how we come up with a potential market cap number, put a bunch of research around that, rigor around that, and do some actual math on the back end to come up with that. But the potential and risk score giving us that opportunity score is going to really help us, I think. A really interesting way of doing this, in my opinion. So I don't have AZERO on here because it's one I'm already like sold on for the most part. But let's go throw AZERO on here real fast. I'm going to do this one with you guys. Coin market cap. Let's throw AZERO up here. Do I have VXV on here? Yeah, I started VXV. Let's go throw AZERO up here. All right, 75 cents market cap. And AZERO has some not the best tokenomics, but for a new launch of a graph-based protocol, it is by far the best tokenomics I've seen. Ranked 3,000. Oh my goodness. $50 million market cap. I need to go buy some more like right now. All right. Is that 0.05? 50 million? Is that right? All right. We're going to say the risk. Oh God. This is going to be such an insane opportunity score. The risk is not that high. This is going to be so nuts. Yeah, it's got a 307. It like blows everything else away. Like yellow, one we're researching right now. I can't find it. Like I cannot find this coin anywhere. Like nobody has a market cap number on it. Yeah, I can't find the actual yellow coin just yet. Yeah, AZERO. That is nuts. Like it's got an insane potential. It's absolutely insane. It's risk. I do some work around the risk here, but the tokenomics both go to the potential and the risk. The team, development activity. And security are big factors of risk factors for me. And also things like on the potential market cap side, this is how interested is the market in that type of project. And I'm going to up these are what I have here route. This is a layer 3, we'll call it. Layer 3 interchain. This is really an interchain protocol, not so much layer 3. I shouldn't call it layer 3, this one. But this is yellow's a layer 3. These layer 3, these Uber, aggregators, layer 3, going to be really interesting. A lot of people have been in on Saito. Saito's an interesting one. This is a play on Web3. This is basically Web3 infrastructure. So if Web3 really takes off and people are having to pay a lot for bandwidth charges for their applications, instead of I think we can solve this at an application layer, this problem that Saito's trying to solve, but it's a very interesting way that they have very good tech. So if I go over here to this research paper, you'll see that I gave them an extremely good tech score. This is where, again, my biggest contribution to the community typically is evaluating the tech of these things. Very good tech score. My problem is tokenomics are terrible on Saito. Which lowers its market cap potential and lowers its higher, increases its risk rating, in my opinion. I just don't like that when I see it really bad. So tokenomics are horrible. Its differentiation is okay. Its market opportunity, this is where I gave it like a mid score. Great tech. The market, there's going to be a market there for it. The problem is I think there's better ways to solve this problem. They're solving this problem. You can see. Let me just read this to you. Web Validation Grant recipient that runs blockchain applications directly in your web browsers pays ISPs instead of miners or stakers. Allows Web3 projects to self-fund infrastructure instead of passing the cost to predatory monopolies. Okay. So basically, you're reimbursing the use of bandwidth as a part of the consensus, the base layer consensus mechanism, right? So instead of in Bitcoin's network, the miners get the mining reward for solving a complex mathematical problem. In proof-of-stake systems, you get rewarded for staking your tokens and helping secure the network with well-known good validators, and you get paid back based on the stake that you provided the system. With Saito, it's a combination of things, but it has a mechanism to reimburse for bandwidth utilization. I again say this can be done at an application layer. In Cardano, there's a way to build this into the base layer even as just a function of, okay, I think this is going to come more into play in Cardano Hydra heads. This is why I've been kind of not as excited about Saito, because I think there's even a better way to solve this. Finally, some realistic views of LTC. Are you a little bit behind? Good. I'm glad you like that LTC view. Yeah, I hope you find my views balanced in general. Cardano can do what Saito is trying to do today, just by adding bandwidth as a base layer thing. I think this is going to be more in Hydra heads. You can change the rules if you have a Hydra head open, which is a layer 2, built-in native layer 2 scaling into Cardano. In a Hydra head, you can modify the K parameters and other parameters that are associated with consensus, and you could, in theory, turn on something like a bandwidth, calculation. Whatever bandwidth you're providing to the network as a node operator, you can be reimbursed for that, right, or whatever. There are also application ways of being able to say, if you have a DApp that is just consuming a lot of bandwidth for whatever reason, within that, you can do nano payment channels in that DApp on a scaling, either a side channel or what does Yellow use? What's it called again? Yellow, hold on one second. Side channel or different scaling solutions. You can create these micro payments. So like Orchid VPN uses these micro payments. Really interesting stuff that they do. And then over here, if we look at I have it in my notes about Yellow. Hold on. Eliminate bridging. Automated clearinghouse. Use this Web3 solution, mature, real-time interbroker, blah, 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 blah. What do they use? State channels. Yes, state channel. Thank you. You can use state channels in an application, these nano payment state channels, and handle this problem of being able to reimburse for bandwidth as well. So anyway, the Saito guys have argued with me with a bunch of word salad that it's not going to actually solve the problem. And maybe I'm wrong about that, but that's just my view. All right, but back to this scoring list. So this is an amazing score. I mean, I know it sounds crazy. The market cap of ALF0 today is $50 million. It is going to compete in this next cycle with other major layer 1 blockchains. It has all the potential to do so. It has the potential to hit $100 billion market cap if it gets the right hype, the right set of circumstances. Things have to line up. It has to really hit. It has to really perform. The team has to really perform well, get a lot of adoption, development activity, hype specifically. But I mean, it can just go massive. And the risk of it getting there is with the good tokenomics it has. So this one's like a no. This is why I've been talking about. I mean, this is why I've been talking about AZERO so much. It can go from a $50 million market cap to a $100 billion market cap. I don't know if it can do it in a single cycle. This might be a 2-cycle thing, but it can get there. That's a huge, huge, huge win. Right? This is how we find our 100x plus winners. Is doing this type of work. But yeah, I mean, I would say projects like Route, Yellow, AZERO, these definitely have 100x opportunities. This opportunity score is massive. Like Route can go to a $10 billion market cap from a $13 million market cap, right? And the risk of it getting there is, I mean, it's a small cap project, so it's got a pretty high risk. But it's, let's go take a look at Route. It's the one I'm starting to really. It's number 685 with a $13 million market. How is Router 685 with $13 million market cap? Is it because of the fully diluted market cap? It's 34. So I think it has not the best tokenomics. If I go to this, yeah, the tokenomics aren't great. I need to dive into tokenomics more on Route before I give it like a real serious recommendation. So don't go off and like put all your life savings into these things I'm talking about today. Just showing you guys how I work through this process. So we got some more work to do in tokenomics on Router protocol. Really good tech score, excellent market opportunity, moderate differentiation. Don't like the tokenomics that well. Anyway, so those are some I'm starting to really look at. Yellow, I like. Okay, somebody else in our community brought this up. I think Tim did. This is a layer 3. This is really, I'm just going to call this interchain. A different way of doing interchain. This is AI. I should probably give VXV a higher potential market. I need to do some work on this. I mean, it's a good project. It's just the big problem with VXV is just there's a lot of competition in this space. We'll go look at Ocean. I mean, they're the leaders in this space. And the problem is how much differentiation does like a VXV have? It's a lot smaller market cap, but they're closing the gap, right? This is a $122 million market cap. VXV is a $23 million market cap. The problem is VXV has closed the gap enough on Ocean that I'm like, the opportunity is not as big anymore as it was when it was 20 cents. I think their opportunity is probably bigger. This is probably more like a $5 billion. I'll have to do some work on that. Saito's huge. Saito's potential market cap is actually 100 billion. I mean, it's a monster opportunity score because it's a layer 1. It has a massive. In the long run, it's like more like that. But this next cycle, I don't see it getting there. So I need to fiddle with this number. Maybe that's more likely. So looking at this right now, I would say Saito has, out of this list, Saito and AZERO have the biggest market cap potential. I'm going to put Saito as 50. I think it gives a really high score. This is huge. Is it $10 million? Is Saito $10 million today? Because it's a layer 1 that can really make some noise, but it just works so vastly differently. AZERO, I think, has more potential. But yeah, look at that score. If I were to gauge the potential market cap at 50 billion, which would be quite the, you know what? The reason it can't get there is again tokenomics. We're gonna have to knock that back. So in the very long run, not this next cycle, but say 3 cycles out, the potential market cap for like a Saito is huge. But that's what's holding the market cap back on this is I have to really just look at like the tokenomics of it. All right. So we have some work to do on this. Like if none of the insiders actually sold and there was a massive, influx of people buying something like a Saito project, then yeah, it could go huge. But again, I don't want to depend solely on hype. I want to depend on people are buying it because they almost have to because of the noise it's making, the good things it's doing. Do I have a chart for? These are hard to get small caps too, so don't go crazy. Saito, Route, BXB. These are some of the better ones though. I mean, these are all going to score well. There's a bunch of trash I've thrown out of small caps. All right. Well, anyway, any questions before I wrap up? I think I'm going to wrap up here. I've talked about everything I want to talk about. Preview that. Go join our community. Look if you go find my Twitter, in the video description, I have a link to our Discord server. Alan, go tell Alan hi, everybody. Fortunately, I'm able to join as planned today's live stream. Missed you. See you next time. Wanting to talk some ETH finally. Nah. And markets with you. All right. Let's take a look at fundamentals here. We'll make this a longer session. Maybe chop this up into some videos next week for everybody. Oh, I didn't log into these. Hold on, I gotta drag these off screen. It blurs out your password, but I'm still paranoid. Security at my background, so. All right. Yeah. So the other thing about not missing the boat here, like if we look at again, there's a lot of scenarios I didn't really talk about as much as I wanted to, but as I should have. Back to the core message, there's a lot of things that can happen that can cause Bitcoin's price to start to rebound stronger than people think, earlier than people think. I mean, again, this could have been the bottom. If we go back to 2018, we could be right here right now. This little bounce right here. And maybe we're probably going to have months of kind of sideways action before we go back up, but we might have already put in the low. And so the opportunity to DCA and be invested is now. Because we're probably, in the grand scheme of things, we are probably here. So if we go sideways for 6 months, you're not really going to be hurting too much to have some investment, some skin in the game. What you don't want to do is still be waiting and look at the chart one day because you've been off, not paying attention, and the price is up here doing this, right? And it's taking off on you. Or even worse, you wake up one day and you're like, I haven't been paying attention to crypto and it's over here. And we're down here. Don't wait till we're up here to be like, oh wow, the crypto. Oh man, Bitcoin broke its prior time high. It's $80,000. You should buy some back again. It's not the time you want to buy, right? We are down here right now. I mean, like I said, it could go down to 13,000 or something, but in the grand scheme of things, it's going to look like this. So either we are like right here, and we have a little bit more downside ahead, and then some sideways price action, or we've already bottomed, and we're just going to be sideways for a while. It's going to be boring, but now is not the time to sell and check out for sure. Now's the time to, if you're bullish on the asset, DCA, build your position, and just take advantage of the fact that we're in one of these environments where price is severely depressed. The reason I kind of think, honestly, that we're more like on this first bounce and we have a little bit more rotation down to do, the reason I say that is more when I go look at the altcoins. Some of these need to get hurt a little bit more. So Cardano, I thought for sure would hit 30-something cents. Good, it's a good place for it to have bottom. I mean, it makes perfect sense. This is a weekly support over here from some price action. We traded down at the gutter for years from 2018 to 2020. We'll probably do something similar, spend a period of time in this kind of depressed lull and rise later. It's probably going to look something just like that, but we're probably closer to the bottom than we are at the top. And now with these assets where you can yield, farm, and stake, this is really the time to be taking advantage of that and not trying to be cute, not trying to sell here so you can buy here, because the odds that you catch that is next to zero. What you want to do is buy a little here, buy a little here, if you're long term, for your long term bags. Now if you're trading, clearly not trading in this, right? As you see, I am not trading right now. Cardano might make some noise and break the 50, but I don't take since I started this YouTube channel and you guys have been watching me, you're gonna finally see me say I'm not taking the trade. We break the 50, yay. Okay, I might take a little scalp or something, but the problem is it's going to hit this 111 and probably curl over, right? It's going to hit resistance up here at 70. And the way that I trade, I'm not looking so much to scalp from 52 to 77, although probably worth putting a trade on. If you look at this profile here, put your stop under this little swing low here at 42 cents, maybe even take a trade. I'd say it's a really good trade setup. I'm just gonna hold on. Yeah, these trades are worth doing, right? Take out this high right here, which should be right on the 50-day. Put your stop right below this swing low right here. Not this one. We've already tapped that liquidity there. We've held that low. This was the capitulation low. You want to see this hold for a little bit of a long entry, but you can put your stop for a longer term kind of. This is a longer swing trade idea. Let's just see how it looks. It's at 2-to-1. 2-to-1. It's right at 2-to-1. It's worth looking at. It's not a great trade. But it's worth looking at because you can see that the 111 lines up pretty well with this prior resistance over here. Let's go to the weekly. Let's throw on the weekly resistance. There it is right there. So this is where the market was selling off, hit a reversal, 3 green weeks, and then took that level back out. So there's going to be your resistance. We traded back through it, though, so that's the thing. So we clearly traded back through it. You see that the market had support. It tried to rally right there. Long wick down, and it lost that support level. That is going to act as resistance again, and then you have more resistance on a weekly up here. But let's go look at the daily. I bet there's a lot of price action. Yeah, so you see this, and we're going to draw this now as a bit of a range. So I really never look at resistance and support as a specific price. I look at it as a range because it never hits, a lot of times it hit pretty close, but we're looking at this range here. You can see this price all traded through here. So that last daily green candle there before it reversed and that's the last little bit of supply that needs to be, that's going to be hit as resistance right where I drew that. Look at that. Look how perfectly that lines up with the 111. So there's your trade potential right there, right? You take a trade when it breaks that swing high right there, breaks this little bit of a downtrend pattern, 2 to 1, 2.08 to 1. Those are worthwhile trades to put on for a little scalp, so I will probably go put that on. Problem is I've moved so much of my funds to Gemini. I gotta figure out what exchange I want to trade this on. No, Cardano's on. I was looking. It's on Coinbase Pro, so yeah, I'll go through this on Coinbase Pro. So this will be a trade setup I'll throw on Coinbase Pro. Worth doing, but that's a little bit of a scalp. Not really my style. My style is to accumulate on these lows down here for really long term, and then really to wait until we're back, we get back above, retake these moving averages, let price compress. You're going to have a little bit of a rally, come back into it, find support, set this baseline, and then when these moving averages have all bottomed out and we get momentum going in the right direction, you get this little bit of breakout. I want to buy support coming into there for these big trades. That's more my style. That is my style for sure. So these little scalps are worthwhile throwing on. So I'll throw that on there. Let's go look for more scalp opportunities. AVAX not as clear. The problem is it's a good enough level for it to have bounced off of. I bet you there's a weekly. It's not super clean. It hit this range, and you see this area right here from back over here through there. Yeah, you see it came right into that range. So you see that a little bit of price that acted as resistance right there around $10 to $13. It held a support over here on the 2021 summer 2021 sell-off. Got a bounce, and it's wanting to hold support there again. But typically, you don't immediately bounce and V off of there. You do very much like what it did before. So I'd be more apt to wait. The 50 is still up here a bit, so let's wait for the 50 to come to us rather than trying to chase it. Elrond into resistance on the weekly below here. Great project. I love the potential, but it broke down, right? It broke down on the security concerns, so it's got a lot of work to do. Cardano's looking a lot better. Cardano's the only one with a setup. Oh, Ethereum looks horrible. I was hoping Alan would come in here and defend Ethereum, but this looks horrible to me. It clearly closed weekly below resistance, a lot of resistance that should have held. It got below that. It's coming into it now. It's going to probably roll over. I could be wrong. It could obviously bounce back up here and then build that as support and resume up. Clearly a possibility. I would say probably 40% likelihood that it gets back above there and builds that as support. More likely we trade into it and trade down, right? I think it's about 60% chance we trade down. What's what I would say right now. So not something I'm looking along. Link looking good. I can see this curling action right here, hugging that 50. Good spot for it to be trying to find a bottom here historically. It's a little bit below this price action. So a little bit concerning. We want to get back above here. You can see this little bit of price action over here. Now, if I had a longer term chart, we wanted to retake that. So let's give Link some time to get back above. But it's starting to curl over. Link's starting to look good. Link is very much historically. Let's go look at the Bitcoin chart. A bear market champion. Yeah, you can see this downtrend. It's starting to work on it versus Bitcoin. So what we're going to look for is we're going to look for this. This is LTC. I'm sorry. LTC's working on setting up something here too. We'll look at that here in a minute. Yeah, Link's looking a little better on the Bitcoin chart. Yeah, definitely. So, we have all this historical price right through here. so really what we hit was this region right through here. So looking pretty good though. Like these moving averages are flattening out. This is what I look for. This is it right here. We took the 50, took the 100, came in the 200. I've come off the 200. What I want to see now is I want to see it trade back down to the 50 or something like that, and hold it and set this as a place I can anchor some risk management on. But I want to get back above these moving averages. And so what we do is once we get into these moving averages flatten out. You know, price gets up in here, buy these dips down into the bottom moving averages, right? As once we hit some historic. Actually, I probably wouldn't even put stops under here, right? We're going to be moving up. So what we're looking for is this kind of sweeping momentum price. We're going to look for a dip. When we get back above the 200, we're going to look for a dip into these historical, like this level right here. A little bit of a fake out, but I bet if you go to the daily. Actually, I know if you go to the daily because I traded this. Yep. So you can see some really great patterns we had. It gave us some really good opportunities. So we got back above all these moving averages. And then you had some beautiful patterns that you could play, right? So you got this little bit of a breakup above the 50, hug the 50, and then break to the upside. Boom, trade on. Trade on when you break these highs right there. Off you go, right? Then maybe take a little profit when you roll under the 50 right there. You have to be out of the trade by the time you cross under here for sure, but you would have made a nice little profit from there. Probably on this parabolic trend line, you break down off of that, sell right there on that pop back up to that parabolic, that breakout trend line, take profit there, and take profit there, and then final take profit there. 3 opportunities to take profit. You're out of the trade, break back above, beautiful. We are probably spectators watching this pattern unfold right here, and a break of that trade on. So that's how I do it. So Link is setting up something similar, right? I can see it starting to curl over now. It is slowing to the downside, and it's starting to want to try to get momentum back. It's got a lot of work to do to prove it to us, though. This is versus Bitcoin. US dollar, we got a little more work to do. So we're going to be patient. We're going to wait for the USD chart to clear up as well. But it's looking, it's gaining strength versus Bitcoin. Litecoin. Yeah, it's Litecoin. Litecoin could pop. Litecoin's wanting to move. It's got to get through this resistance though, right? So when we broke the 2017 all-time low weekly close, we see it held it for a while. It finally broke it, found it as resistance. And then we set this on these wick lows right here. We've built up. You can see it, rejection. We've built some resistance. So we're gonna wait for this to fight it out. So what's gonna happen? What should happen? High probability. We hit these resistance areas, but we're above these moving averages. You can see Litecoin versus Bitcoin's above these moving averages. It's probably gonna fight this out and then give us a breakthrough. It very well could just get rejected, right? But when it breaks through, it should make a decent move. If it breaks out, it should make a pretty good move. So look at the USD chart. Yeah, so now Litecoin's looking really good, actually. I mean, it's horrible looking downtrend chart. We're not going to trade it right now, or I'm not. But I see opportunity building for sure. So you can see that, yeah. I mean, it's been bottoming out in this channel down here for years now. Litecoin, again, it's such great tokenomics on it because it's no founder's out. It's just a pure fair launch, one of the few fair launch cryptos out there, right? Proof of work crypto that it can really, really, really move. This is the USD chart. Yeah, I mean, this is looking great. If you like the project really long term, this is just like our 200-week moving average on Bitcoin. When you get to this super bottom, channel that it's been putting in, this is your time to accumulate. This is your accumulation. You accumulate here, here, and here, right? This is accumulation time. If I'm not a long-term holder, I've got my Bitcoin. I'm good with that, but I trade Litecoin like crazy. and it's setting up beautifully. Right, so what we're going to do is we're going to wait for it to prove that it's going to hold this channel. You're going to give it, it's going to take time. You know, bear market style over here is super compressed for years, right? And then it popped. And then you hit your 2018 lows, bear market rally. So we're looking for something like this to unfold. And Litecoin can move pretty fast, but I'm seeing it set up on the Bitcoin chart. So you can see here this bottoming pattern. Just take a look at that. And look at this kind of V down here we have right now, right? Yeah, so you had this like initial sell-off, small bounce, final capitulation, initial sell-off, small bounce, final capitulation. And then you kind of prove it takes the 50, drags the 111 down here. Once you get above the 50, fight with the 200, get above the 200. Start taking trades when you're above all these moving averages. The 50's moving the right way, the 111's moving the right way, 200's flat. When we get to all those scenarios, we can take some bear market rally trades here pretty soon. This is going to set up. I'm actually looking at this going, I'm excited about trading some Litecoin again here because, yeah, Litecoin could have a really nice bear market rally. Look at last bear market, bottomed out at 22, topped out at 145. You know, if we ride safely, get above these moving averages, ride the momentum from 50, draw our breakout trend line, actually just get out around the loss of the 50 here. So let's talk about how we would navigate this. So you see we lost the 50 over here. How do you navigate when you just entered a trade and you're already losing your top moving average? Well, you take some profit, but you leave your so say this was your entry. Say what you did is you had some support and resistance and you bought this. This didn't give you a real clear support test on the daily, unfortunately. But say you brought this break out of this high right here. So you just say this wick high or this wick high. You had something like that. Or you even waited for this price action over here. What I would do is when this big breakout candle here happened, I would be on a very low time frame, probably doing some fib extension work. And I'd be looking for loss of momentum on this, take a little bit of profit, 10%. So hopefully we get out over here. You see some you're going to draw something that looks like this, a crazy parabolic breakout trend line. And when you lose that, you're going to take your initial 10% off. Watch it trade down into the 50, lose the 50. You see this one green candle? You have to take profit on that loss right there. So 33% at least. Your stop goes to break even. So we've taken 43% off or something like that. 33% off total at least. So say you're 50% out. Really, you should be 50% out at this point, right? You lose the 50. You're 50% out. The rest is sitting here, stop loss at break even, and then it rallies on you. You can put on a fresh trade. You can re-enter risk on because you have the criteria. You have your wick low, so you can move stops for all this up here when you get this price action. You can then re-enter that 50% position back on with this stop and profit under this wick low. That's how I would trade that, right? So you're back above the 50. You see this red candle get put in here. I'm gonna put on a trade back on. Trade on 50% back on. We break that pattern, or even over here, this pattern. So you might have taken this little bit of a breakout and then had to take some profit here and another breakout again. And just keep doing that. Same thing. 50% out over here. Stop in profit. Move. You need to be moving your stop. So at this point, what we're going to do, I'm just walking through how I would do this. I'm going to have this wick low that we put in here, right? And our launch point from down here. I'm going to watch for price to break all that. But we're going to take a lot of profit here on the 50 roll, 50%. We're going to take 50% out on this 50 roll when it rolls over the 50%. And then I'm going to look at, all right, I have my stop and profit. So this original 50% is actually going to be off. That's first in, first out. That's what I want to take profit on as we roll this. So this initial position over here is going to get fully taken off right here. So the first 50% would have come off between here and here. And then we're back in. So this initial position gets taken off here, first in, first out. And now we technically have this position on. So I'm going to move stops up to wherever we re-enter the market right here. But I'm looking at this trend line here, and I'm gonna leave that stop at break even. I would have got stopped out. So yeah, on this sell-off, I'd have got stopped out break even. So there you go. So I'd have had a 50% win here to here. So let's look at just if I were to trade this, right? So we're risk on right here. A little bit off here, but we're gonna try to push the trade, right? That's what we do. But we have to on this roll right here take 50% off. So we're 50% out. So we have 150% win from 57 to 67, and then we re-enter that 50% at 80, roughly, and you get out at 117. So your trade is really from 50, yeah. So you really have a trade from 57 to 68. That's 50%, and then the other 50% goes all the way. Yeah, so that trade becomes a 50% exit here at 69. Then the rest of it at 117. Then this additional position we get put on here probably gets stopped out break even, unless you said, okay, this really moved quite a bit. You measured your detachment from the 200, 130%. Yeah, okay, 130% above the 200 moving average. We're gonna exit 80% here. So this is gonna be a 20%. Stop loss at break even. 20% on, let it run. It's going to come back to us in this scenario. It's not going to keep running. But there you go. That's how I would have, hopefully, would have traded given my trading system. So, see how I would have done it there? Something similar is going to play out now. Now, you might not get as clean of an entry down here, and you might not get as as a big of a move. This was from bear market low to bear market high, a 565% run with tons of trading opportunity in there. We probably won't get a 565. What is 565% off this low? Some big number. Oh yeah, no, for Litecoin, sure, yeah, I can get 270. That's not that big. It's really good returns. You trade 42, so I'm not gonna be in trading until it's at least probably 80 something bucks, $85. But when we get that momentum, I'll be happy to trade 85, probably not catch the top at 274 to 200. I'll take that trade. So the trades are coming. Don't miss the opportunities. That are coming. Bear market rallies are coming. We're at some really historically oversold points here, so there's lots of opportunity all around. All right, let's close out with some fundamentals on Bitcoin. I'm jamming out over here to some good music too. Let me throw up my Twitter, see if I got anything interesting on Twitter here. All right, so open interest is coming down. We're at 7.4 mil. Reset Zoom. Yeah, I'm looking for it to get all the way back to. It might not, right? We hit a 5 billion on the summer 2021 sell-off. Before the bull market started, we hit a low 700. But you're never going to get back there, I don't think. So yeah, I think given that this is up and to the right, there's a good chance this was the low in open interest. Now, I wouldn't be shocked given that this sell-off is more severe that we don't actually get underneath these summer lows. I'm not going to bank on it one way or the other. But it's low enough that this could be candidate for a bottom is more my point. I could see this having been the bottom, the final wipeout. Exchange reserve, nothing concerning here. This is what keeps telling me that the recovery might be a little bit sooner, or at least the bottom, we might be just going ahead and putting a bottom here around 20K instead of dropping that 13K or whatever. But again, we've been saying that for such a long time as coins have been coming off of exchange that there's still 2.4 million coins on exchange. So it's not like price can't tank. Price can tank if all 2.4 million coins sold, price would be a penny, right? So let's not get ahead of ourselves. This is just showing that in general, people in the market are wanting to hold their coins safely in self-custody or their own wallets and not on exchange. That's what it shows us. So that's conviction, it's buyer conviction. Funding rates slightly positive, nothing to write home about. We do have some overhead for a while now, for months now. We've had some overhead in open interest. It's actually a lot of short side open interest still open. So a bear market rally could be rather severe because we might just get a really strong wipeout of the short side leverage. All right. Similar trades. I got a lot more chart. I mean, I look at a lot more stuff. This is just what I look at very quickly here on these streams. Yeah, coins on exchange still coming down. Open interest looking good. Funding rate pretty much neutral. And the number of Bitcoin Bitcoin addresses with the 0.1 whatever balance. This chart is just parabolic. Just look at this. This is adoption. Look at that. It is just up and to the right. This is the number of Bitcoin addresses with an 0.001 balance. So I guess that would be a $200 balance today. Yeah, $20,000 Bitcoin. Tells you that these are wallets that have something in them. People that have some skin in the game, right? This is why I kind of use 0.01. But yeah, I mean, it's a lot of wallets. A lot of wallets. All right, thanks everybody for joining me. I know nobody was expecting this. I did not advertise I was going live tonight. Hopefully, we come up with a more consistent schedule that people can follow easier because this has been a bit hectic. But the last Sunday of every month, we're going to go do a late night crypto and rum. I'm going to finish my rum here. And I might do some impromptu ones. This is the regular one we'll do. Last Sunday of every month. Monthly close is coming up. Let's look at one more chart here. Does the monthly close mean anything to us? Not really. I mean, you know, obviously last monthly support is, interestingly enough, I did not really think about that. That makes sense though. So the bear market rally stopped at the monthly resistance set in 2017, which is around $14,000. So very good likely candidate for the bear market bottom if we do get one more rollover. $14,000. It's a lot of credence. I'm actually gonna go ahead and move this. This is my Coinbase major chart, master chart. So I'm gonna throw this. There you go. That's a perfect touch. I think I recall that, but I'm not sure. But I'm gonna change this color to green. That's my monthly levels. I put them as green levels, but also it just indicates it's a really strong support level. And we got some support at 10,000 on a weekly. This is a weekly support. But it looks like we got, yeah, it's still 10,000. This would have to be, you know, hit $10,000 have to be one massive liquidation week, and it's going to bounce out of there, I would imagine, pretty strong. But I would be, yeah, I would just be watching it all. I do have orders at 14,000 and 10,000, just so y'all know. In case we do get those liquidation events, they're sitting right here at this level, 14,000. And so $14,000 even, front running that 13,386, and $10,000 even. I'm just trying to catch liquidation spikes low on those orders. But yeah, monthly chart, not much to show. We got a bunch of weekly support in that $19,000 to $20,000 range, and then you see that the ultimate supports at monthly at $14,000. But again, I mean, nobody knows if it's going to 14,000 or not. Like, nobody knows. People may say all day long that they think because of this, that, or the other. Nobody knows. 17,000 could very well have been the low, and we might get some more contagion from the 3AC and Luna meltdowns, and the Fed really ratchets up rates, and we get one more rollover, and we hit that $14,000 level. But why be cute and be completely out? You know, there are people that I know that have sold everything, and they're just waiting for $10,000 to $14,000 to start buying again. Like, why be cute and sell everything when we are below the 200-week moving average like the millionth time? This is historically a really strong place to buy. And there's a whole bunch of other on-chain market indicators that show that we are really, really in that buy zone. That maybe not dump 100% of everything you have into it, but have some skin in the game perhaps. Perhaps be dollar cost averaging. If you have cash flow from other sources that you can buy at a regular increment, maybe ramp that up. So instead of buying, say you were buying $20 a Bitcoin a week, just as you had Coinbase or Gemini set up to buy $20 a week. If you can afford it, buy $100 a week right now, maybe like that type of thing. Like ramp up your DCA activity, put more capital if you can. This is the time to do those sorts of things. This is not the time to be out of the market waiting for it, to hit much lower prices, because most likely, even if it does hit those lower prices, you're gonna be like, well, I don't know, you're gonna be scared to buy, and end up chasing price at $80,000 later on. Let's not do that. Let's be pragmatic. It's not likely to go a lot lower for much longer. It can go lower, and it can go lower for a little bit longer, but the high probability is that we are really close to a bottom. Under the 200-week moving average, fundamentals are still relatively strong. Macro concerns, yes, but the markets are trying to bounce. They did sell off. What did the NASDAQ sell off total? A bunch. It was a bunch. Yeah, 34%. I mean, 34% sell off on the NASDAQ's pretty good sell off. And the question is, did the market get as far ahead of itself as it did in 2000? I would say this bubble, no, not anywhere near the 2000 hype and euphoria, because the monetary conditions now are very different. So if I were to do NDX, let's look at this. Last thought here. This is the S&P adjusted for M2 money supply, right? So you can see here, this was a clear euphoric bubble where it got way ahead of the entire. So M2SL is the entire money stock, right? So the money supply of all the monetary assets out there. So total money supply, it got way ahead of. This is a super euphoric bubble. This is a super, super low depression. The 80s are terrible. Super low, super high. And ever since then, we've had a pretty strong low. And we've never really had a super euphoric high. We've had, the market got as overheated now as it did in 2007. Do we think there's another 2008 crisis ahead of us? There could be. We'll see. But you look at the markets from this vantage point. We're not as. This chart doesn't look as scary as this chart as far as the potential downside, right? So the last chart I just showed you is reality. This chart I'm showing you is fake. This is fake. Why is this fake? Because 80% of this is because of monetary supply expansion. 80%. 80% of the fact that price went from $665 to $4,700 is not because people were euphorically pouring into the stock market. No, it's because the federal government was borrowing massive amounts of fake printed money from the Federal Reserve, and the Federal Reserve was dumping money into the markets, and just like between the bailout money from here and the bailout money from here, there's been a massive supply, and so unlike 2000 when the chart was actually hype, organic hype. Get rid of these moving averages here. This is the money supply. The S&P 500 should look like this because of the money supply expansion. So when you adjust for money supply expansion, the economy has gone nowhere in years, which It actually should look like this, frankly, because it should balance out with the monetary supply for the most part. But yeah, you've gained, and when you look at it in terms of monetary expansion, we've gained nothing from 1960 to 2022. But it should kind of look like that. They had tons of money pumping in the markets in 2000. It was insane. Look at this chart. I mean, it was going up, and then it just went up. Like it was cruising. Like, look at this. All right, it's pretty strong trajectory upward, right? And then you get over here. That's a different level of trajectory. This is COVID money printing. And that's just insane. Absolutely monumental. And this is how much it's come off. There's your dip. So we did this, and we got this dip so far. Like, anyway, point is, they can't stop inflation entirely. They're not going to get to 2%. Not going to happen. So hard assets, it's going to take months. They're going to be able to, the central banks are going to fight this thing for a few months. They're going to try to slow down demand. It's just going to, the only way they can kill inflation is to slow down demand, supply and demand, right? Everything's supply and demand. So we have more demand than supply. You have inflation. So they have to slow down demand to balance the equation. And if they slow down demand, cause a recession, then yeah, okay, you're going to tame inflation, but cat's out of the bag probably. So they're going to have to back off at some point. When that pivot happens, it's going to catch a lot of people off guard, because a lot of people thinking this is like Y2K sell-off, and it's not. The parallels do not exist. The hype and euphoria that existed in 2000 around stonks. This was truly detached. If we can put this on a log scale, this was truly detached from reality by massive numbers. This is moderately overvalued. I mean, there's a lot of growth stocks that are pretty strongly overvalued, but this bubble was really hype and euphoria. This is really a lot of hype and euphoria. This bubble is mostly, a little bit of hype and euphoria in a few sectors maybe, but this is money supply expansion, what this is. And they're not going to rein all that back in. It's just not going to happen. But it's going to take, give it months, right? So months and months and months and months to really find a bottom, and for them to kind of reverse their policies. But it's not going to be a 10-year, this isn't a hype cycle bust like this, where it's going to be from this point to this point, 15, 20 years of being down on your investments until you finally, dollar-wise, it was 20 years to recover your funds. If you bought the very, very peak of 2000, it wasn't until 20 years later that you were back in the profit, right? 16, 17 years later. But that's actually by US dollar terms. If we can look at NDX divided by the money supply, we didn't reach that peak, right? This was a euphoric peak. This is a very strong peak, but again, think about this. Legitimately, the chart we're looking at right now is the companies that were being bought over here that had billions and billions of dollars of market cap produced zero revenue. Companies over here are producing hundreds of billions of dollars in profitable revenue. They're producing nothing like that over here in this bubble. And so when adjusted for money supply, we got nowhere near that, and this is real. This is the realization of this hype. This was all hype, and we've realized that hype. Microsoft is really, Google, Apple are really producing tens or hundreds of billions of dollars in positive revenue a year. Over here, they were not. Right? This was all hype. This is realization of hype. So Again, adjusted for money supply, we did not have anywhere near the same hype cycle. So, does it mean it can't sell off? Does it mean that the banks, central banks can't really fight inflation and cause the markets to come off quite a bit? I mean, I think, again, the ultimate inflation hedge is real estate. So look for that market to really be the one that comes off. When you look at earnings, like if we were to adjust this chart for earnings, you're going to see a very different chart. This bubble over here is way bigger. Like if we look at forward earnings versus this. All right, guys, that was fun. Again, I apologize for not being very organized with letting everybody know. Last Sunday of every month, we're going to try to do this as a regular thing. And then if I happen to have other times I can do a late night crypto room, I will. When the markets get exciting again, that's when we'll be doing more of them. But Bitcoin's got some work to do to prove it to me to really put trades on. But definitely a great place for long term to step in and add. All right, guys, take care, everybody. I'm going to let's go with an outro. Anything else I want to share? Anything? Questions? So that's cool. Let's just get out of here. I need to go to bed. I'm getting tired. So let's find our outro music, and you guys, we'll see you next time.